Good evening, everybody. I am Subramanian, authorized mutual fund distributor. Happy New Year to all my clients and my well-wishers. Today, the purpose of this video is to highlight what are the common mistakes that we do in building up our portfolio, investment portfolio. So to elaborate on that, I'm going to give you now the different asset class performances for 2023. How the different asset classes have performed during the year 2023, I'm just going to elaborate. Small cap 44.9%, mid cap 42.5%, large cap 17.8%, international 25.17%, gold 12.3%, credit risk 9.3%, government securities GSEC 7.7%, corporate bond 7%, treasury bills 4.3%, real estate 2%. So these are the, so if you see this again, I will read out. Small cap 44.9%, mid cap 42.5%, large cap 17.8%. The list goes like this. So if you see this list, definitely equity mutual fund have given better return, and out of equity mutual fund, small cap have performed well, giving a return of 44.9%. So if one sees this, immediately you can ask me, sir, if I know this performance, definitely I would have invested my entire money in small cap fund and I would have earned a better return. Here only we commit mistake. The main mistake that we are doing is, based on the return, we put our entire money in a particular portfolio. Then if you don't get it, you will definitely be sorry about it. That should not be the way. This is a common mistake that we do. But to avoid this, what will be the basis? How to avoid this mistake? Now if you see, small cap, mid cap, large cap have performed well. But the same asset classes have not been categorized in the same way in 2022. If you see 2022, the small cap was somewhere in the 9th rank, but in 2021 it was somewhere in the different place. So every year, at the end of every year, the different asset classes perform differently, which we cannot predict. So based on the return alone, one cannot build a corpus and put your entire money in that particular asset, which will be a great mistake. Everybody does it. We should not do it. So how to go about? The best way to solve all this thing is, you should have diversified portfolio in different asset classes, so that your overall return will be higher. Now you take the case of equity mutual fund, which has performed well in all the asset classes, small cap, mid cap, large cap. How to select? In these situations, it's not that much difficult. In these situations, see, there is multi-cap fund. What is multi-cap fund? Based on SEBI guidelines, 25% minimum has to be invested in mid-cap, small cap and large cap. 25%, 25%, 25%, and the rest only can be invested in. So you have a diversified portfolio once you invest in multi-cap. Similarly, flexi-cap, 65% invested in equity funds, remain only in debt funds. So if you similarly, large and mid-cap portfolios are also there. So selection of this portfolio should be based in such a way that you have a diversified portfolio, so that you have exposure in all the sectors, So the common mistake that we do generally is, all the investors, based on the return, entire money is locked up. That should not be the basis. And that is the purpose of this entire video, the purpose of this entire video channel. Similarly, your investment should be long term. Definitely should be 3 to 5 years. Then only you can see your return. Don't time the market. See to it that how much time you are spending in the market. So that should be the formula. And similarly, again I am repeating, a diversified portfolio you should have, and see that in all the asset classes you have exposure, and a diversified portfolio will definitely give you a better return. With this, I conclude my session. All the best. Once again, my happy new year to all my clients and well wishes. Thank you very much.